Hello everyone. This is the pre-market report video for today 15th June 2023 in the Indian stock market in terms of Nifty and Bank Nifty. But in this video, I like to discuss more about the last night's Fed interest rate hike and its related content. Regarding that event, we can divide that into two. One, Fed interest rate hike and its official report press release. Then the second, it's Fed Chairman Jeremy Powell's press conference with the media people. In terms of whole press conference video, I'll provide the link in the description below. If required, please have a look. It's around 45 minutes long video. First, regarding the report press release, Fed did pause the interest rate same as previous as most of us expected, which is already the highest US Fed funds interest rate since 2007. So there is no surprise there. However, then in the statement, they mentioned that they are increasing the peak expected interest rate to 5.6% by the end of this year, which is 0.5% higher compared to that of the previous guidance in last May and March. Again, I will attach the original report in the description below. Anyway, now if required, please pause and have a look. These are the macros he projected and how it all changed compared to previous meeting. As I said earlier, in previous March and May meeting, they mentioned that peak interest rate will be just 5.1% by the year end. They increased that now to 5.6%, which means this year itself we will have two more 25 basis point interest rate hike, which clearly market don't want it, but it is what it is. Even one of the journalists asked the Fed chairman, why you increase in future rather than increase it now, and why not we all get over those? For that, Fed chairman said it's just a guidance and what they believe. They were taking decision meeting by meeting, so based on the present data, they want to pause it and need to study the impact. Also, Fed wants to give some time for service inflation to cool. He also cited the reason that core PC inflation to be at the elevated level of near 3.9% by this year end. Earlier, it was projected to be just 3.6%. In his mind, he wants both the PC inflation and PC core inflation to come below 2%. He said, then only we will have a sustainable 2% consumer inflation. So that's the negative one. Then the positive one. In the last two meetings, Fed chairman expected US economy GDP growth rate to grow 0.4% in 2023. Now last night they revised those target and said that US economy expect to grow by 1%, which is more than double than that of the last time projection. Similarly, unemployment rate expect to increase just to 4.1% rather than 4.5%, which was the previous guidance. Both the things were really positive since they expect the soft landing and thus the economy might do good. Means no recession fear. In the NCP Fed officials voting, 17 members out of 19 members expected the interest rate to remain above 4.5% for the whole next year. The whole calendar year 2024. Comparatively, in the last meeting, they said that they expect to start the rate cut substantially in the second half of 2024. Now, that's not the case. Again, it's the reason they gave. Their tool is now projecting the 2023 year-end PC inflation to be around 3.9% compared to the earlier projection of 3.6%. In the statement, they mentioned that they expect to start the rate cut only from 2025. It means they are going to keep the higher interest rate for the longer period of time. So that's the summary of the statement. As soon as the report was released to the press, all three US major index dropped nearly 1%. Then S&P 500 and Nasdaq started to recover when the Fed chairman speaks, not the Dow Jones. Now regarding his speech, in one simple sentence, it's more of the neutral. The present drop in inflation mainly comes from goods and not from the service related inflation. And they need to increase the peak interest rate to 5.6% since the core PC inflation is still at the higher level of 5%. So, if the next PC inflation is not lower means, then he said that he will again increase the peak interest rate further upwards. Just for info, next PC inflation for May month is scheduled to release on 30th of June 2023. PCE means personal consumption expenditure. Then he wants to keep the interest rate higher for the longer period to allow the housing service sector to cool down, since that sector will always take time as the rental contracts will only renew periodically. So those are the reasons he explains why he is raising the peak interest rate and why keeping it for the longer term. To summarize, He is keeping the interest rate for longer term to cool down the housing rent and is increasing the peak interest rate forecast to reduce the PC inflation. Is it all negative in his speech? No. As I said multiple times, he clarifies that he expects there will be no recession in US on 2023. US economy will grow at 1% and he expects at the end of 2023 unemployment rate will be only at 4.1% from the present 3.7%. And also he mentioned this is just a present day status, but if the inflation cool down faster means then he will reevaluate the situation about cutting the interest rate earlier. So, because of his press conference, S&P 500 regained all of its points. In the end, Dow Jones decreased by 0.68%, S&P 500 increased marginally by 0.08% and Nasdaq up by 0.39%. Regarding VIX, it too had a roller coaster ride, but in the end, it dropped 5% and moved below 14. Despite all this, there was oil stock spike in the US EIA inventories report, which made the oil to drop over 1%. At this time of this video, Brent crude oil is trading near $73.5 US per barrel and WTI crude oil was traded at $68.5 US per barrel. Then about Indian areas in US market, unlike US market, it's completely disastrous. ICICI Bank, Wipro and HDFC Bank, all three was down around 0.4 to 0.8%. But the main culprit was Infosys as it crashed near 2%. Regarding the reason, we'll discuss in a moment. In terms of SGX Nifty, at 3 am Indian Standard Time, it closed at 18,823, which is roughly indicating 30 to 35 points gap down towards spot Nifty today. So that's all about the global market. Coming to India specific. First, negative news. After our market close, one of the major global financial services company, JP Morgan, released the report that they were negative on Indian IT stocks. They mainly said three IT companies, TCS, Infosys and Mphasis, and they believe all three going to post a terrible quarterly results in the current quarter. Just for info, at present TCS is trading around 3,200 rupees per share. Now, JP Morgan gave the price target that they expect TCS to down to 2,700 rupees per share by March 2024. For Infosys, they expect it to reach 1,150 rupees per share by March 2024. For comparison, at present it's trading around 1,300 rupees per share. I think it's a huge negative news for all IT stocks. Let's see how market will react to it. Then the second news, which is also not so positive, is regarding HDFC Bank. Rogers released this article. As per the SEBI rules, mutual fund cannot invest more than 10% of their money in a single security. As of yesterday, at least 60 equity mutual fund schemes in India got their combined exposure to HDFC Bank and HDFC that overshoot over 10%. So for now, SEBI didn't give any exception. Obviously, this is negative for both HDFC and HDFC Bank. As a summary, today looks more of negative since there is no positive news that I'm aware of to push the index in the upward directions. I sincerely hope I'm wrong, and at present, the only hope is US market and global momentum, as it is not that bad. But SGX Nifty down, there is a bank and IT weakness, all kind of indicating negative market today. Let's see. Again, it's just my opinion. I can be completely wrong. I'm just conveying you guys what I observed. About the things to look out. First, before the market opening, various China-related macros are scheduled to release and those can impact on our metal stocks. Then, I'm not aware of any during our market hours. Finally, in the aftermarket hours in the night for US, retail sales data, weekly jobless claims and industrial production are some of the important items we need to look out for. Just for info, in addition to all above events, yesterday both India and US released the wholesale inflation and producer price index data. Ideally, it's same, it's just a name difference. Anyway, for both of them, the inflation comes negative, which means compared to a year ago, price now dropped. Thus, this will increase the profit margin. Let's see. Coming to technical, Nifty opened higher gap up of 30 points at 18,745, but then it slipped to the day's low of 18,690. However, it regained in the morning session itself and touched the day's high of 18,770. Thus, it formed a doji candlestick with a long lower shadow on daily charts, indicating a buying at lower levels. And Nifty continued to make higher highs, higher lows for the second straight session. Nifty took support near 18,700 and bounced back sharply, but failed to surpass the important level 18,775. The short-term formation of the market is still in the bullish side, but below 18,700 we could see a quick intraday correction. Let's say 18,775 would be the immediate breakout level to watch out, and above Nifty could rally till 18,900 to 18,950. Whereas selling pressure is likely to accelerate below 18,700 and Nifty can retest 18,600 to 18,575. As far as Bank Nifty is concerned, despite Nifty being positive, Bank Nifty has closed in the negative yesterday. And it has been trading in a narrow range around the 20-day moving average 44,000. Thus, as per technical analysis, expecting the Bank Nifty to hold on to this support and resume its up move. About options open interest, for Nifty, first from change in open interest, almost very few call option open interest were added and some number was unwinded between 18,600 to 18,700 and significant quantity of new put option open interest added at 18,700 and 18,750. So it's difficult to make any conclusion based on this data. So from overall options open interest data, 18,700 got the huge short straddle and 18,600 got the maximum nearby put option open interest. So 18,600 is the strong support for this expiry. And the maximum nearby call option open interest is present at 18,900 and thus 18,900 is the strong resistance. For Bank Nifty, based on overall options open interest data, we can see that 43,500 level will be a strong support for this expiry and 45,000 level will be the immediate resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.